Well, isn't this fun? There's Bitcoin down around 14 to 15%. Here's Cardano down around 22%. Here's Ethereum down around 17% off these recent swing highs. The chart from a technical analysis perspective is kind of concerning, and we're going to talk about these things. But there's one chart that matters even more than these charts that I just showed you, and those charts have nothing to do with crypto. What's up, everyone? Welcome to Crypto Capital Venture. Please hit that like on the way in and let's just jump into the video. We just covered a few different cryptos. Depending on what coin you're looking at, everything's down for the most part, some more than others. But before we dig into, real quick, these three charts, I want to just remind you all that this chart is what is fueling the crypto fire that we're seeing right now. The crypto collapse, whatever you want to call this nice little downturn in price. This is the chart. This is the S&P 500 index. This is kind of a reflection of traditional markets. And if you've been watching my YouTube channel, you know for weeks now, we have been tracking this entire move from this swing low, basically off of just above the 200-week moving average through the 20-week moving average and up towards the 50-week moving average. The concern here during this entire move was, listen, this is a rally. The world is not looking too hot right now. This is a kind of a short-term rally, a lower high rally into a bigger fall. And the reason we were saying that was because not only is this what we see a lot on charts, but this is exactly what happened in 2008. And I'm not saying that right now we're in this 2008 environment again and it's going to be that bad, but I am saying from a macro standpoint, it's not exactly the same, everything that was going on with real estate and stuff, but from a macro standpoint, what's happening with inflation, the rising interest rates, and right now, consumers continuing to spend and rack up debt in this environment, not good. And I don't see the worst being over just yet. And so when we see a chart like this from 2008, right, and the move is so similar in a kind of a bearish environment, right, bouncing off the 200-week moving average through the 20-week moving average here, S&P makes its way to the 50-week moving average, and then it stalls out, and then it continues. And you can see even there was a kind of a nice bounce back to the moving average area and then the rejection, right? And there's a lot of fear intertwined there. So we have to really pay close attention to all these updates that are coming out. I feel like it's like every Wednesday, everybody's on edge almost, and everybody's waiting to see what the Fed is saying, who's saying what, and what's going to happen next. But we have to keep a close eye on the sentiment and what is happening there, because right now we're in a very similar area, right? Not exactly the same, but we're hitting the 50-week moving average. It's a lower high. And what does all of this look like? There's a very big space between now and the end of the year, which is what this white line is. A lot can happen. And again, I'm not saying that there's going to be some mass capitulation like there was, all the way back there in 2008. But listen, we don't know what can happen, and we better be very prepared. Back in 2008, you can just see how everything broke through 200-week moving average getting broken, and markets just completely just free falling. So if we go to the charts now, it is up for debate how low things go, right? Will we just get a retracement and put in a higher low and just sideways trading? Is there going to be a new low? Is it going to test a 200-week moving average for a 15% dip? Is it going to be in the 25% range back down to around 3,000? We have to watch. But here's the concern about it. And I said this in a recent video. Crypto has never traded in an environment like this. We've never been here. So while right now Bitcoin on this chart, this is a daily chart, it's trying to find its bottom, right? We're in the bear market formation. We've seen recently just kind of around a 40% rally from the swing low that we had in June. We're in this massive Fibonacci retracement, which is a cycle retracement area that Bitcoin has seen historically in previous cycles, where it basically it consolidates in the area, and what we've seen historically is it capitulates below the 786 line. Now here we are on the Bitcoin chart, and you can just see the 786 line was kind of tested back here in June. And once again, if it's going to be tested again, it's around an 18-20% move from where Bitcoin is right now. That's kind of a big deal for Bitcoin, right? 18-20% move. And if traditional markets are not bottomed out by then, and that's not a very big space, 18 to 20%. If traditional markets are not bottomed out by then, that's the case for Bitcoin to make its way below this 786 yellow line that Bitcoin kind of has done in previous cycles. Namely, here's the 2018 bear market low and just the formation of that bear market low back here. I'm not trying to instill fear, but we have to be very realistic and careful right now and not just running off of hopium when we're looking at the charts. And Cardano, I mean, similar thing right now, maybe even in a worse situation right now. And we can also look at the daily charts and these moving averages breaking not only for Cardano, but also for Bitcoin. You can see Bitcoin moving averages, the 50 in blue, 20-day moving average in green being broken. So ADA, those moving averages unfortunately being broken. I'm going to talk about that in another ADA video. But right now, this macro trend line down here for ADA, I think is only around, it's like a 5% move away. So we really want to see markets kind of cool off here, get some type of bounce off of these support areas. And right now, if ADA does not get that, and if markets continue to fall, along with Bitcoin, traditional markets, Ethereum, ADA is looking into putting in a new low in the 30-cent range. And that's a big deal. And I know that sounds very, very crazy to a lot of people. But if you've been through a bear market here before, you know it is best in the downtrend and in this chaos to just anticipate the worst. Just anticipate it. Don't guess, don't predict, don't try and, act like you know exactly what's going to happen, but just anticipate. So ADA testing these trends line, Ethereum with all the things going on with Ethereum and the merge coming up, kind of a volatile situation, right? That needs to go well. But Ethereum, 17% to the downside right now, breaking the 20-day moving average, kind of breaking this higher low momentum it's had in a similar boat to the downside from where it is right now. We're looking at price range wise to test previous lows. That's a 40% drop. So Ethereum, I would say, in kind of a better position on these charts, mainly because it's had this pump to the upside and it's kind of outperformed in the short to midterm, probably because of the merge coming up, right? So that's a really big deal for Ethereum as markets in general try and bottom out. But everybody, I'm telling you, the chart that matters is this one. This is the S&P 500. It's really what we should be monitoring. And alongside that, I'm going to continue to do just videos discussing this chart and discussing the news surrounding what is going on in the economy, what is going on in the world, because those are the things that are playing into this chart right now. So right now, 200-day moving average rejection for S&P 500 could be a quick retracement, right? Let's track the 20-day here in green and the 50-day down here in blue. To the downside, we still have another 2% or so to the 20-day moving average and a 5 to 6, well, I should say probably 6 to 7% to the 50-day moving average. So gonna monitor this. Could it put in a higher low? Yes, that would be good for crypto, especially as crypto trades within this bear market formation. So let's continue tracking it, everybody. Be very careful out there. Again, I'm not trying to instill fear in you, but you know what we do on the channel. We anticipate every scenario. And right now, it's just a red day, and we just have to kind of anticipate more red until we get any signs of reversal. And that kind of starts on, yes, traditional markets. And so that's what we're going to do, track those markets. I appreciate all of you, everybody. Hit the subscribe. Please hit the like button on your way out. I'll see you in the next video. God bless.